Have you ever wondered why silver, often seen as gold's less glamorous cousin, might just be the most important metal for our future? Forget what you think, because we're on the brink of a silver supply shock that could send ripples through the entire global economy. This isn't just about jewelry or old coins. It's about the very technology that powers our modern world. And the numbers, well, the numbers are starting to look scary. For the past 3 years, the world has been using more silver than it produces. Think about that. We're in a deficit. In 2021, the gap was 51 million ounces. In 2022, it quadrupled to a staggering 237 million ounces. And last year, it was still a massive 184 million ounce shortfall. This isn't a blip on the radar. It's a trend. We are consistently consuming silver at a rate that our minds simply cannot keep up with. So, where is all this silver going? The answer lies in the green energy revolution and the explosion of artificial intelligence. Every single solar panel you see soaking up the sun contains silver. It's a key component, and with the global push for renewable energy, the demand for solar panels is skyrocketing. The solar industry alone consumed nearly 200 million ounces of silver last year, a huge jump from just 50 million ounces a decade ago. And experts predict this will double again within the next 5 years. But it's not just solar. Silver is the most conductive metal on Earth, making it essential for virtually all electronics. Your smartphone, your laptop, the data centers powering AI and cloud computing. They all need silver. As we demand faster processors and more powerful devices, the amount of silver required in each component is also increasing. The electrification of everything, from cars to home appliances, is creating an insatiable appetite for this precious metal. The average electric vehicle uses almost twice as much silver as a traditional internal combustion engine car. Multiply that by millions of new EVs hitting the roads each year, and you start to see the scale of the problem. Now, you might be thinking, can't we just mine more silver? It's not that simple. Over 80% of silver is mined as a byproduct of other metals, like copper, lead, and zinc. This means silver production is tied to the demand for these other industrial metals. Miners can't just decide to ramp up silver output on its own. They are constrained by the economics of their primary mining operations. Furthermore, new major silver discoveries are becoming incredibly rare. The high-grade, easy-to-access silver deposits have largely been depleted over centuries of mining. What's left is lower grade or that is more difficult and expensive to extract. Building a new mine is a monumental task that can take over a decade and billions of dollars in investment, with no guarantee of success. So, even if the price of silver were to shoot up tomorrow, a significant increase in supply would be years, if not decades, away. This brings us to the supply side of the equation. Where do we get our silver from? The top producing countries are Mexico, China, and Peru. However, geopolitical instability and stricter environmental regulations in these regions can, and often do, disrupt supply chains without warning. For example, recent political turmoil in Peru has caused temporary shutdowns of major mines, highlighting the fragility of the global supply. Any significant disruption in one of these key countries could instantly tighten the market even further. So, we have demand from essential industries like solar and AI growing exponentially, while supply is struggling to keep pace, constrained by geology and geopolitics. This is the perfect storm for a supply shock. But what about the silver that's already out there? I'm talking about the bullion, the coins, the silverware stored in vaults and homes around the world. Couldn't that fill the gap? This is where it gets really interesting. The visible, above-ground stockpiles of silver have been plummeting. The inventories held in major commodity exchanges like the COMEX in New York and the London Bullion Market Association have been drawn down significantly over the past few years. These are the stockpiles that industries and investors rely on. As the industrial deficit grows, these vaults are being emptied to meet the demand. At the current rate of depletion, some analysts predict these stockpiles could be functionally empty within a couple of years. When that happens, when the industrial users can't get the physical silver they need from the exchanges, they will be forced to bid aggressively for whatever is available on the open market. This is the scenario that could trigger a massive price spike. We're not talking about a gradual increase. We're talking about a potential panic, a scramble for physical silver that could send the price into uncharted territory. Imagine a world where the cost of producing a solar panel or a smartphone suddenly doubles or triples because of the silver price. The ripple effects would be enormous. The green energy transition could stall. The cost of electronics could soar. Companies that rely on silver would see their profit margins evaporate, potentially leading to bankruptcies and job losses. It's a scenario that would touch every corner of the economy. This isn't just speculation. We're already seeing the early signs. Major industrial users are reportedly bypassing the traditional exchanges and going directly to refiners and even miners to secure long-term supply contracts. They see the writing on the wall. They know that a reliable supply of silver is critical to their survival, and they are taking steps to protect themselves. For the average person, this might seem distant, but the implications are very real. The price of silver has historically been suppressed compared to gold. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been hovering at historically high levels, around 80 or 90 to 1. The historical average is closer to 15 to 1. A return to that mean, driven by a supply shock, would imply a silver price many times higher than what it is today. This isn't a prediction of what will happen tomorrow or next week. It's an analysis of a powerful, long-term trend that is building momentum beneath the surface of the global economy. The collision of unstoppable demand from future-facing technologies and a fundamentally constrained supply is creating a situation unlike anything we've seen before in the silver market. The question is not if this imbalance will matter, but when. And when it does, the shock could be felt around the world.
Thanks for watching.
If you found this breakdown insightful, make sure to hit that like button and subscribe for more deep dives into the economic forces shaping our world. See you in the next one.